What's up, everybody? I'm Trace Cohen. This is my brother Maxwell, and we are the Startup Brothers. And basically, we're starting a podcast. We're going to see where this goes, but we have a lot of knowledge we want to help people with, answer questions, and see how we can be helpful. Proverbial VC, investor, startup, value add. So, who are we, and why do you care? I'm an angel investor for the last 5-6 years in 30 plus startups, some markups, series A, B, C's, doing relatively well. Happy to talk about that. But I started my first company in college, a PR agency afterwards, a digital agency after that, had some acquisitions and a lot of follow-on growth. And I've been in the tech scene in New York for almost 12 years now, since 2010. So I think I've learned a few things. I work with hundreds of founders, meet with thousands more. And hopefully you're going to get something out of this. But on the other end, I have my brother, who is a founder right now, will introduce himself.
Hey guys, my name is Maxwell. I founded my company in college, and I started to notice, my friends how were having issues washing their sheets on a daily basis. And as you can tell, Trace and I come from a very entrepreneurial side of background, and I thought to myself, there has to be an easier way. So that is my background, is everything that I've built to date. I started the company in college, never really had a real job, did some real estate on the side, had to make some money in the early days. But now we have a full-fledged business company called Peelaways, something we could all relate with. When was the last time you washed your sheets? And we've been pushing the product and the journey, and had a wonderful journey over the past 7 years. But that journey that's what we're going to get into, is how fun this game can be, how fun it cannot be. And to me, you start, the better you get at it, the fun part is the turmoil or the hurdles you have to get over, the fact of keeping cash flow and staying alive. So
What was that word? Cash flow?
Cash flow.
I don't know what that means.
Even if you're not a CFO, the CEO's goal, and really their only reason to exist, is to make sure the company doesn't run out of cash while trying to strive and thrive at the same time.
Right,
So
but
Trace,
I invest the pre-seed and seed.
yeah.
So cash flow is great. We want traction. We want MRR, ARR, or just top-line gross merchandise value. And so my job is really just to invest in the company so they can keep raising. We want companies to be sustainable. Profitable is a word that's now coming back in vogue that we can discuss. Gross margins, unit economics. And so why are we starting this podcast? Because basically 2 years ago, when COVID hit, things got weird. We basically had a 10-year bull market, and things were going fine and steady, almost like normal. People got comfortable. But then COVID hit. The tech world kind of shut down for a few months, at least on the venture side, because we're like, oh no, we can't meet in person. How do we get business done? We realized you can do it digitally. You do it like this. I'm in back-to-back Zooms, and then the market completely took off. And a lot of people, 2 years of growth pulled ahead, started getting a little ahead of themselves, and valuations went up, markups went up, lots of funding. I think there was $50 billion worth of funds raised just last year alone. And if you're a VC, you have to invest. And now we're seeing, yes, in a downturn, 10, 12, 14 years kind of in the making, yeah, this is going to happen. And now we're relying on our companies to figure it out. That's what we invest in. And now is the time for founders to figure it out and for investors to start working with our founders, making introductions, hiring, raising more capital, business development. And so at least on the back end, what Max and I see is the founders who are doing a lot of the work. Max, on a daily basis, what he's going through with his company, the highs and the lows. Same with my portfolio of 50 companies that I'm supporting on a daily, weekly, and monthly basis.
Yeah, from a founder's point of view, these past 2 years have been a wake-up call. We raised money in the past when everybody was cocky, everybody's portfolio was going well, and the market had a 12-year bull run. And it's always a very valuable time to take advantages of those times, because now, Trace, we just saw that tweet with the Y Combinator telling everybody to make your runway as
Buckle
long as
down.
humanly possible. Buckle down, cut every expense, and focus on what's working and what, get rid of what isn't. So from
What
my
we
point
call
of view,
runway.
runway. We all raise money on the hopium that this runway is going to last us 18 months. At least that's what I know they want to hear, whether it's true or fully true or not. And now it's whatever you have left in your bank make last 18 months, because this is going to be a wild, wild ride. And something that personally hit us, and once COVID started, is how long is this going to last? Is there any way we could benefit from this? What is happening to our supply chain? There's so many, mechanical issues that you have to keep greased up that are so out of your control. So something I've learned throughout the past 2 years of, being a business still growing and working on becoming profitable is to go in crisis mode. And it's true. Trace and my father said, go in crisis mode, always be in crisis mode. And I never understood that. And that is some of the best piece of advice I've ever received. Until you exit your business, be in crisis mode. And that doesn't mean be cheap. That doesn't mean, cut everything bare bone to the point where, it becomes hard. But make your money last. And as a CEO, that's my only obligation to my employees and myself and my
And that's
investors.
what we're looking for. We invest at the pre-seed and seed and ideas, products with maybe some traction. I made 12 new investments last year. Half of them were pre-product, pre-revenue. And everyone is always asking, what are you looking for? I'm looking for amazing founders. That's probably like 50 to 60% of what I'm looking for. And so who are these founders? They're serial entrepreneurs, maybe successful, or maybe they just have experienced unfair advantage of 5, 10, 20 years experience actually dealing with this problem, not just kind of looking for a problem, like, I found something, I want to kind of change it. Have you ever done this before? No. Well, I don't want you to kind of learn on my dime and my time, because if I'm an investor, I'm looking to make money off of you. We're capitalists, but hopefully with a heart to help you as long as things are going well. This is business. It's professional. We try and make it personable because I invest in people I want to spend time with. I want to be successful, that I want to be rich. And when they accomplish their dreams that I buy into, we all win. That's the goal. And I get to make a lot of bets. It's harder for founders. They've won big, substantial bets. And this is their baby, their lives. And the goal is to continually keep it alive. And to your point about Y Combinator, they have, I think, 300 to 400 companies now in cohorts. They're ridiculously big, but they have multi-billion-dollar funds. And so we, in my tech echo chamber for the last few weeks, all the VCs are tweeting, shit posting, and sounding the alarm from going, raise 100x ARR to, hey, maybe kind of cut some burn, don't lay off people, but we're starting to see them, and try and figure out what is a sustainable business model and raise expectations to raise what your next round is. And so you saw the Tigers, the SoftBanks of the world writing these multi-billion-dollar valuations, which, at the time, stonks were way up. So it's a public comp that gets completely copied in the private markets. And so these valuations are somewhat made up. Usually you buy a percentage. And so Y Combinator say, look, we're going to go through some tough times. What's that mean? The funding will not be there as really as readable as it was. The top companies will still raise. If you're growing 1 to 300x year over year and you got the traction, that's what people are looking for. It's that kind of gray area in the middle that we're going to start seeing a lot of issues with, where if you're going 20, 30, 50% in 1 year, that might not be good enough. So we're going to get back to what we used to call basics of not just party rounds. And if you invested, there must be some credibility, due diligence. Like, who are you? Have you done this before? Is that business model real? Like, I'm going to look into it. I'm going to do some customer referrals, some kind of previous boss referrals, talk to some friends. And so it is a wake-up call. Everyone's been saying for 12, 14 years that this is the best time when the best companies are made. And you know what? It definitely hardens a founder. It's already hard enough. It's not always a fairy tale of, I read a press headline in TechCrunch, New York Times, Wall Street Journal. We know that is kind of past successes that took months to do, potentially with my background in PR. and everyone's giving you kudos, and you're like, yay, that really didn't do much, but thank you. Or maybe
Yeah.
it did help. You raised funding, but that's just beginning. Funding is convincing someone that you're worthwhile, and then you actually have to do it
Yeah.
and do it really well. So that's where the sounding of the alarm is. You can see on Twitter, or Y Combinator posted, David Sachs of Kraft, another billion-dollar fund, PayPal Mafia, like he just did that as well. And it's basically just saying, hey, everyone, let's get back to something rational while the market crashes, and funding may not be as readily available. We're trying to figure it out. Because people ask, where do you invest? I invest where I think the market is going to be in 12 months, 18 months, as Max was saying, for runway. By the time you're starting to run out of money, because I don't expect you to be profitable. Yes, I know, blah, blah, blah. But I expect you to hit certain numbers that I know my friends in the next stage are looking for. And so I'm still kind of figuring out what they're looking for now. I'm not sure. I haven't actually made a few investments in the last few months because I'm not really sure where we're going to emerge, when we're going to emerge, and what we're going to be when that happens.
Hey, I feel the same way. I don't know where we're going to emerge, what it's going to be, and what's going to happen. But you could do the most you can. You know, I would say COVID's been a blessing in disguise. It really allows you to get smart real quick as a founder. You know, it's very cool. We both have the same, perspective of what the VCs are doing and with their funds and their own personal struggles to the greatest investors on planet Earth getting destroyed left and right, which shows you that, who knows? Who knows? But, I used to get jealous of founders who, came from decent backgrounds, starting businesses, raising money at these massive valuations, taking $180,000 salaries right off the bat. As a first-time founder and a sole founder, those things are, not in your wheel book. Why? Because I'm doing it for the business. This is not just a a pet project that became something, and now it's like, all right, how can I capitalize off of it? I started with very little risk and put everything into the business, and the past 2 years have been a complete wild disaster. Our B2B business completely fell apart. Our supply chain business, it just cut
Well,
out.
tell me more about the supply chain. That's what we're dealing with now. So dive a little bit more into that.
So the truth behind the supply chain is there's ports and cities being shut down in the beginning of COVID. When I first started bringing in containers back in 2014 and 15, the container was $1,600. And when I say container, that means you rent one of those big 40-foot containers. You're essentially just leasing it. They bring it over here on one of those ships, and it gets taken to your warehouse of choice.
Right,
and
but it has to go
to
through.
Smooth. It used to be so smooth to the point where it created something called just-in-time inventory. Right? Capitalism means don't waste a dollar if you don't have to. Do things as, I'm not going to say as productively as possible, but as thin as the skin on your teeth as possible when it comes to timing, because nobody wants the inventory, nobody wants to pay for that. But I believe COVID has completely changed the game. From countries hoarding their own products to my manufacturing facility stopped making my product and just started making PPE gowns for their countries. So we went and we had to change our business model. We went from a B2B business to selling to institutions and distributors to, Maxwell taking control of the only thing he could take control of, which is, direct to consumer business. And 2 years later, that decision to push us in that direction allowed us to control our destiny even more and allowed us to refine, our goals and, our playbook. But I hate the word pivot because it sounds like you had an idea and you completely went off off the deep end in a different direction. But I like to call it iterating. Right? We're just iterating on
iteration is the new innovation.
And if you don't iterate quickly, you will get left behind.
Yeah,
It's
and
just
pivoting
business.
isn't bad. We have companies pivot all the time. Of my 30 investments, I would say half of them have pivoted. And a pivot isn't a 180. Like I went after this and I did this. It's I had this idea, this thesis, this vision,
got smarter.
and as I got smarter, as I spent 3, 6, 9 year on this, I learned something new. The
Yep.
customer doesn't want this, they want this. It doesn't say this, it should be this. I have to modify it in this way. And that's where we bet on you, the founders, to figure it out. We agree with your initial vision, like this is something that needs to be disrupted, changed, iterated, updated, fixed.
Yep.
If it ain't broke, don't fix it or make it better. As we like to say, sometimes you just have to suck less than the competition. Never can really compete on price, but utility. And the customer isn't always right. Sometimes you have to show them what they want. Yeah, I say that. Like, I see enough having sold my own products, your product, and all the companies we invested in. They have to be told sometimes. And, it's scary. If you come up with a completely unique product that doesn't exist, that's also really scary. Like, why hasn't someone done this? Or have they tried and continually fail, fail, fail? But to your point about supply chain, we have a few CPG direct-to-consumer products, and it's definitely been an issue of getting it overseas, becoming a priority, nationalism of them just hoarding certain products or priority. When there was an issue, sure, you can have all the products you want. But now there is, you're a small startup. Like, we're going to keep our bigger customers more happy. And so it's definitely kind of modifying the way that we're looking at investments of where we think the market will be. Is this going to subside? Is it going to get better? Or will it just kind of go back to normal eventually? We just saw this. Walmart and Target just took 10 to 25% stock market drops. Why? Consumer demand is still there. We know inflation is a problem, slightly rising prices, which is still kind of new. We're getting used to it. But the bottom line is what hurt the most. Rising costs, labor costs, shipping costs. All of that went up, so it's eating at margins. So, great, we love our B2B SaaS enterprise. The margins there are still relatively high. Not so much a commodities issue with a physical good. You physically have to make it. You physically have to ship it, move it. But then again, you also have to engineer a product and you have to update it. And so it's a similar analogy. But you pivot, you figure it out, and you sell what you can when you can, because you have a company. Your goal is to keep that company alive for as long as possible. Not just meander and be a zombie, but actually stay alive and continue to grow. And at all costs, we have companies who fire people. Now there's a lot of layoffs. Get it ahead of time. Business is war. That's what this is coming down to.
And a lot of business isn't even up to. It's just world circumstances. People have emotions as well. Business is just really hard in general. You could pay somebody and they still fail you. But you're right. When I said control our destiny, we could raise the prices in the U.S. to our customers that we work with. And this is that inflation thing that we continue to talk about. Why do I have to raise my price? Because my healthy margin with a $1,600 to $2,000 container, we can make money, at the prices we were, advertising. But once we have to start paying $16,000, $18,000, $20,000 for the same container that 18 months ago only cost us $2,400 after all the taxes and fees, it's incredible what, as a founder, what obstacles you have to jump through. You raise your prices on this end and you cut every expense. If there's any, you trim the fat. Sometimes I hate to say, you got to trim some meat. You're going to go under the fat. It is what it is. It's just business. The emotion of business is really difficult. So what COVID allowed me to feel, at least, is I feel like a second time founder. And those were the people I was originally jealous of, because they were just raising at these astronomical numbers. They don't have a product, and I have one of the world's greatest products, of course. Disclosure. I invented.
Humble.
Yeah, humble. I got 5 patents, and what COVID allowed me to do is, in crisis mode, is we relied on China to bring our products here, and manufacture our products. But the shipping and trade relations started getting more and more difficult. So it pushed me to find a new manufacturer. And since that's happened, we now manufacture in India, which is an incredible ally of America, at least when it comes to trade, faster shipping, it's cheaper shipping. They're working with new people is incredibly humbling, and they also believe in what we're up to, which gives you the boost to continue doing what we're doing.
And this is exactly what we're looking for founders. When I talk to a direct-to-consumer CPG founder, they tell me about their business. We always try and look for red flags. what am I missing here?
Yeah.
We always want to look for why we want to invest, but there's always certain questions of like kind of gotchas or okay, maybe they're making it up or don't know what they're talking about. So when it comes to CPG direct to consumer, I always ask, do you know what business you're in? And they're like, yeah, I'm selling XYZ products. But no, you're in the logistics business.
Mm.
And so when I meet a founder doing direct to consumer, CPG, anything in hard products, if they don't have a background in logistics, if they don't have this kind of set up already or haven't done it or have the right people or can't hire that person, that's a huge red flag because that's your actual business, as Max was saying, just in time. You have to do the ports, you have to do negotiations, you have to import it, you got through customs. You have to get it from one warehouse, ship it on a truck,
Pick
get
and
it to
pack,
another warehouse, pick and pack,
customers.
like all these other terms. And so then you got to set up your Shopify, your Amazon, all these other platforms, and then all the plugins
Yeah.
and integration. So that's fun. You can learn. We invest early, and that's great because we hope for the bigger upside, but then we do want that expertise. So it's been difficult, and this is what we look for in our founders. And so moving on, though, Max had a great idea. We're going to see if we're going to make this kind of our shtick. Is we're going to go through some of our emails. We're not going to actually read them. We're going to kind of say at a high level, like what's kind of going on right now. And we'll go back and forth. We'll do 5 to 10 each. And so just looking at mine right now, top one is Stonks, not the stock market. It's a company called Stonks. I know it sounds kind of ridiculous, but it's a pitching platform. They just raised $10 million, I think, from Andreessen or
Whoa.
Sequoia. And what is it? It's a pitching platform. It's actually exactly like this, where you can invest in the company, they pitch, and you have people watch. It's like a digital demo day. I know you've heard of all of those. It's actually an impressive platform. And so they're doing their day 30. I think they started maybe 6 months ago. The founder is actually a direct-to-consumer founder. He was a Moz Ali, I believe. He started a deodorant company, pretty much kind of bootstrapped it. We'll verify all these details, but sold it and now is helping other people raise. And so I've been going to these demo days, and probably when they started about 6 months ago, the valuations were kind of ridiculous. I haven't invested in any of them, but the last few that I've been to, the valuations have been a little bit more reasonable. And I actually have submitted my companies to pitch at the demo day because it's been impressive. So every founder you're looking to raise, you unturn every stone. I get DMs,
Yeah.
emails, people tweet at me.
You
The
got a
cold
Venmo the
warming
other day,
drills.
right?
I was just gonna say, someone actually Venmo me like 2 cents. Hey, look, actually reminds me, I never got back to them. I have to. I've been wanting to do that. So you tell me about your email. I'm gonna do that right now. Put down a little note.
Yeah, I mean, companies are still pitching, so I love that. It sounds like the big guys are still sending giving money and such. I love that. I love to hear it didn't just fully stop. My last email was, a restock report. I have a team run, as a sole founder, and a small startup. I have a consulting team run my Amazon, and they tell me when I just need to restock. And I'll tell you the brutal truth. For the past 6 weeks, we've essentially been completely out of inventory. Our container was held up. Chinese ports shut down. And so what did I do? I ordered an extra container on top of it. So we have another one that's leaving today, which leads me to my next email. So as a company, as a CPG company, as any company moving tangible products, Trace is absolutely correct. The more logistics we're doing, the more money we're making, right? So I would joke around and say 70% of my business is just logistics, moving from this warehouse to Amazon warehouses, to the Walmart warehouses, to shipping to Walgreens and a few other customers we sell to. And we're essentially in the logistics business. And I know from a VC's point of view, it sounds like it's hard to learn and get into. It's just about organization. There's a lot of brokers out there. Just Google it. How do I get a container from China to here? I just email a broker. And then the next one is, I shouldn't even be talking about this one. This is something that it's something that's in the works. And, as Trace mentioned, this all started with a cold email. So, your next big move can be a cold email in a direction you never thought was the rightest, but it doesn't matter. It's whatever direction grasp at this point, during these turmoil times. So that's a really cool opportunity. And as a founder, you want to make sure you're always finding cool opportunities. They maybe didn't think that market could use your product, but you sent somebody something and it intrigued them to at least try. And so that's a situation we're in.
Yeah, I'm
What
gonna
was
jump in
what was your
now.
next email? Yeah.
Yeah. So I have probably about 3 or 4 pitches, and they're all like, "Hey, Trace, we're doing a lot. This is what we're doing." And so I probably get, I don't know, 20, 30 pitches a day. And it's founders trying to raise their pre seed and seed. That's where I play. And so kind of just going down here, I'll open this one. Oh, this is exactly kind of what I'm looking for in terms of the example I wanted. So they're raising $1 million. They're in the mental health space. There's a lot of those these days, which fortunately we kind of need, but I think it's somewhat overplayed. I will another day muse about what I like and don't like about every single industry, but this is exactly the kind of email that I'm looking for. So I will get back to this founder. Hi, name, company, what we do, and 5 bullet points of app is live, how many installs, MRR growth, and experience. Here is what we're raising, and here is the deck. Done. This is actually, I would say, like a email. Don't
Wow.
send me multiple power. Yeah, actually, like,
I
yeah,
haven't heard that in a
perfect
while.
timing for this. Yeah, it's an A email. Send me name, what you do, bullet points, how much you're raising, deck. Be concise. Do not send multiple paragraphs. I don't want to read it. You don't want to write it. And if I am worth anything from experience, I probably have seen multiple iterations of your company before. I might have invested in a similar competitive one. Don't worry, no one shares any information, but I should know exactly what your company does. When you tell me you're X for Y, you're doing this, I should know what you're doing. And so let's see, that is a really good one.
It almost sounds like a
Um,
retail shelf. Like your packaging has to attract the eye. Are there some that you just don't respond to? Or are you generous with your time and respond to all of them, or
There are
some
certain
of them?
ones I don't respond to, and I'm going to try and find one. But the idea is if I open it and I just see like 3 or 4 paragraphs, I'm just like, this is
Mm.
painful. One, ain't nobody got time for that. And if it's just full of jargon and trying to convince me of something, that's what like your deck and the conversation is to be. This needs to
Mm-hmm.
be like a spark notes. I want a few sentences, bullet points, what you do, who cares, why you're doing it, what you're raising, and maybe some filler just to kind of understand that you did some work. Who is your team? Why do I care? What's your unfair advantage? And so, actually, the 2 top emails I have are really good, so I have to reply back to them. Another one is actually an emerging manager. So, during the last few years, there's been a lot of emerging managers. These are the
Yeah.
funds that are raising 2 to like 50 million, and they're either former finance operators, founders, or investors who have left larger funds to raise their own. And they're usually the scrappier, like get in early pre-seed seed, investing 100,000, maybe up to 1 million, depending on their size. So, what's my job? I have to one invest in companies that do well, but I also have to help raise money for my founders. So I make introductions all the time to potential co-investors. I
Yeah.
share when I see a deal. I know who my experts are. I send it to them. Karma will go back and forth. Maybe we'll co-invest. And if I know an industry well, they'll tell me exactly why this is good or bad. And so I'm considering raising a fund, looking for a partner. I'm meeting as many funds as possible. I'm trying to learn. And so trying to find people to co-invest with, an expert network, and always just trying to get more deal flow. That's all I really care about when it comes to investing. So you do one more email, and I'll do one more, and we'll wrap it up.
All right. I mean, I've learned in this new world we live in, you could outsource everything. And, nobody understands that having employees, you pay them one thing, but it costs the company another, and they only receive so much. So, the world has gotten faster and smarter. And so I've taken a lot of advice from Trace. So this is a company that I found. I guess I could use the name. It's called Billio, and they make just user generated content. And they just created an awesome video for $59. This is not a plug. This is not a shout out. This was just something that was on my email. But the way I found them is what I really want to talk about is I just Googled, top VC backed video creating content company, right? And they popped up, or their SEO hit me or something. So, I used to roll my eyes for founders by founders. But now it's made for founders, by founders, is the direction you need to go in, because they felt the struggle over the past 10, 15 years, and they built something to, to solve most of the struggle. Everything's relatively new, but
Yeah.
it's been really, really helpful. And starting a business, from my understanding now and everything I've seen, is a lot cheaper today than it was 5, 8 years ago.
Yeah, I agree. And the last email, Forbes, live webinar, register for how to build a crypto portfolio in market
God.
turbulence. That's an unsubscribe and delete, because that's not what I'm interested in. Like, I get subscribed to so many things. I don't even know why I'm getting this, but like, don't tell me to build a crypto portfolio among a turbulent market. It's like a money manager. Great. You may be smarter than me or something else, but like, what are you going to tell me? Buy Doge because it might go up and Elon will tweet about it? We shall see. But the only thing I'll say about crypto is I don't invest in it. We've had successful pivots into it. We joke, like, if when in doubt or if it's not working, pivot to crypto, because there's so much frenzy around it and people don't really understand it. I have some NFTs behind me. I'm an art collector. These have some real utility. I'm an owner in some stuff. You can research some of these behind me. But the only thing I'll say about investments and all the crypto stuff, if it seems too good to be true, it probably is. And if XYZ person is investing, do your diligence. If everyone is now coming out the articles like, oh, the crypto celebrities aren't saying anything about like their shilling. They got paid. They don't probably know. Most people don't know how not just tech startups but crypto startups work. So do your own diligence. Do not follow and do not FOMO. Those are the two biggest things that you need to work on. The one thing I've always learned in startups and investing, there will always be another one. Ooh. You might feel guilty if you pass on a company and did well. At least you saw it. And so that's kind of what helps me sleep at night, that I pass on 99% of the companies I see. I probably met 1,000 companies last year. I invested in 12. It's hard. And I'm the biggest diamond hands. So is Max. Yeah. I can't sell my equity. We're in this for the long haul. This is a marriage. We invest in people we like, that we want to be successful. And so I don't need to be sold. I just want to be convinced that you're the right people, this is the right time, and people will care. So with that, we're going to end it. We like to keep 30 minutes. Don't want to go over. This is Startup Brothers, and I'm Trace Cohen.
I'm Maxwell Cohen, and we're glad you listened to our conversation, and we appreciate your time. Trace is a top VC in New York City. I'm a ramen noodle eating, struggling entrepreneur, just giving you it the real way.
Yep. Find us online. I'm on Twitter. Email me, DM me, however you want. I'm everywhere. I make it accessible. So thank you. We'll see you in the next one.